why it is so hard to find a job right now. Let's get into that. Hopefully pull some data. Let's have some fun. Let's goon to the economy.
It's getting harder to find work in the United States. In August, businesses added just 22,000 new jobs.
That's actually quite a weak number.
Look at McDonald's data, food sales. Well, that's why they're trying to get into like Happy Meals again and food bundles. Like that's why Taco Bell's been doing so well.
Looking at that in isolation, that would actually be a lot more consistent with the start of a recession, historically.
Gone are the days of 200,000 jobs every month. We're likely to be in an environment
That was a crazy time. Yeah, I mean, we won't see that for probably at least a few years, right?
where job growth is hovering around zero, essentially.
The US labor market is worse than previously thought. Less than half of the people polled by the New York Fed say they could find a new job if they lost their current one.
Okay, so that's asking them if they think they can. Because they're not currently unemployed. They're saying if they lose their job for whatever reason.
Downside risks to employment are rising. And if those risks materialize, they can do so quickly in the form of sharply higher layoffs and rising unemployment.
The Federal Reserve can give businesses more confidence to hire workers by adjusting the federal funds rate. The Fed is lowering this key interest rate as companies navigate changes on trade, immigration, and inflation.
Companies are holding back because they're both trying to see what the tariffs will be, what the effect of the tariffs will be, and inside of that is what happens to their profit margins.
They're willing to deal with the uncertainty, but they need to react to that. And so part of that is just being very prudent in how they're hiring.
Why are jobs disappearing? And can the Fed do anything to bring them back?
Well, lowering rates a lot would definitely hype up the unemployment or the employment market, but it would also hype up inflation. So I don't think anyone's, well, actually some are advocating for bringing rates down to like zero. I don't know.
The slowdown in hiring is most potent for younger workers.
We're seeing a lot of pressure on the younger generation when it comes to this labor market. We're seeing many firms facing higher imported costs, and they are, in many cases, struggling with the cost of talent in a high interest rate environment. The tech space, the finance space, the professional and business services.
A lot of them are moving towards that AI marketplace as well. Not necessarily replacing jobs with it, but trying to build out AI products.
Space are sectors that are under more pressure, and they are the ones that generally are big hirers of younger cohorts.
Recent college graduates typically have better job prospects than the overall labor force. Historically, they have lower unemployment
Not for young men right now.
levels too. That trend reversed starting in 2022.
The United States has been suffering from a series of rolling recessions. Pockets of industries or industries themselves that have gone through their own downturns, whether it was manufacturing or consumer goods, it just hasn't bubbled up to the broader economy. I would put the youth employment situation squarely in that category right now.
The high-paying information sector is flashing warning signs too.
Ooh, what is this? Early career. Oh, that's, okay, what is it? What are we looking at specifically here? Well, what are we?
Software developer roles for work.
Okay, these are open roles. Yeah, I mean, it makes sense. Listen, in a tighter labor market, we're hiring people in the software world, building the, continuing to build the DollarWise budgeting app, dollarwise.com. And, we're hiring people with more experience right now because the labor market's tighter. So let's get the people that are fucking kicking ass. We are not desperate to fill with people who are less experienced. This makes sense. Headcount over time. Yeah, I mean, this is the thing. This chart's it's not necessarily misleading, but the thing is, it only goes back 4 years. Obviously, this was when we were like fucking get anyone in the door we possibly can. What the fuck? And what do we pay for a senior dev? Too much money. I don't know the exact price tag off the top of my head, but I let that team take care of it. But too much money. But yeah, you can see right here, this is when it started to correct. We were no longer just hiring everyone in the fucking world. We got a more stable job market. Now we're headed to not the best job market in the world. Isn't inflation inherently bad? Because unless it's closely managed, it will eventually lead to currency becoming worthless. For example, 600, 900% cumulative inflation. Not high inherently bad in that like 1 to 2% that the Fed shoots for. You know, it encourages people to invest because holding on to money loses value. So you'd rather invest it into something that's going to bring more money. Most dangerous is stagflation because you make more money if you hold on to it versus putting it out there. So it's not inherently bad, but high is inherently bad. Yes, thank you. See, my head of engineering, head of tech, Jeremy right there with calebhammer.com/careers. Yes, if you want a job. I'm curious why you don't think a GFC type event isn't likely. All indicators show this is arguably a worse situation than the one leading up to the GFC. I don't mind either way due to trading, but the signs are there. I'm not saying it couldn't happen. Just in terms of an overall like Great Depression, Great Recession, you know, those massive, like that's not a correction. That's a we got fucked. That's every like 80 years or so, typically. We absolutely have like, you know, what was it? Shit, the 80s, the 2000, you know, once every, I think a recession or a stock market correction, which is 20%, is average every 6 years or so. So I'm not saying that can't happen, but you're talking like 2008 levels, 1940 levels, like, or 30s, sorry, 1930s. But even still, yeah.
Workers in their 20s.
I just don't think it's going to be that extreme. Just from a historical basis, it totally could be. I'm not willing to bet on any way that it's not going to be. The greedy part of my brain, would love a 2008, 2009 recession. Because the greedy part, let's look to Dave Ramsey, made all his money there. He bought real estate at a low level and it went up. Now, in general, because I'm not a piece of shit, I would still rather, even though I would make a lot of money, I would still rather that not happen because a lot of people lose their jobs. A lot of people lose their housing. A lot of people divorce. A lot of people kill themselves, literally. Commit suicide in a horrible economic recession such as that. And I'm not willing to trade that for making more money. But there's, of course, the selfish part. So, like, if it does happen, at least it's an opportunity to make a lot of money. So I'm not, like, sitting here and saying, it will not happen. I just don't think it will. But if it does, it does.
Are down sharply since 2022.
Jobs and consumer spending is the only thing left to bubble. Well, I think there's a very decent chance we're in a car market bubble, but I don't think if it did pop, I don't think it would be like an entire economy obliterating thing. I think it would fuck us a bit.
Young marketing and sales managers are having trouble getting hired as well. That said, younger workers are finding jobs in the health and retail sectors at a relatively fast pace.
Yeah, more recession resistant. People get older. Aging population. Get into health.
We know that companies are turning to technology and AI to figure out if they can maybe stomach some of those costs or bring some of those costs down without having to hire somebody, at least initially.
AI is very new. The capabilities of it are not
Subprime burrito loan bubble with buy now, pay later. It's possible.
very well known. Well, to the
I'm in retail, but I get commission. That's like shoe sales, stuff like that. Okay, yeah.
extent that it can replace jobs, the first jobs it should be replacing are those new entry-level, simpler jobs.
A small collection of industries are still adding workers.
You're still seeing resilience.
Like Hammer Media! calebhammer.com/careers.
Resilience in the healthcare space and in the leisure and hospitality space. Those two sectors are upholding the labor market, but there is increased evidence that over the next 6 months.
You know what's crazy though, for those who don't follow the numbers, tech market isn't the highest laid off sector this year. You know what it is? The federal government. It's leading in people getting fired.
There might be more weakness out of these two sectors as well. Less than half of the private sector is adding jobs, and manufacturing would be one of the key industries. But we're also seeing increased softness in construction activity, a telltale sign that housing activity is experiencing a slowdown. We're seeing businesses being more cautious with who they hire, how much they hire, and also in some cases proceeding with
Oh, weird. I don't know why. I'll have them fix this, but for some reason it's home.calebhammer.com/careers. It's not calebhammer.com/careers. Jeremy, can we fix that? I know you're in chat, Jeremy. Can we fix that? Look at this. We got customer support. You know, that's obviously entry level, lower pay. Live stream editor, that one is actually going to be a higher pay, and it's going to be in New York anyway, so pretend this one doesn't exist. Product manager, that one's, I know we're paying a shit ton for that. Full stack engineer, there's a guy in the office being interviewed for it, and he's Indian, so I know he's good. Right, Jeremy? Right, Jeremy? I think that's how the math works. And that's paying a lot. YouTube producer, 75 to 95. Director of curriculum and learning, yeah, that's going to be stealing from a university, though, and that will be high as well. He gave me a haha in chat, so we're good.
Strategic layoffs.
He's not Asian, so I mean, it's like we're getting like the second level. It's like if you want a lawyer, you want a fucking Jewish lawyer, okay? That's all I'm saying. You want an engineer, you want to go. Okay, we're going racist. We're gooning to race right now. We're race gooning.
The Fed's interest rate policies also contribute to today's labor market slowdown. These interest rates influence Americans' job prospects and the pace of price increases. Lowering them can mean more jobs and more inflation.
Caleb, I'm still suspended on Twitch for my opinions on India. Noxon, you freak.
Raising them may mean less inflation and slower economic growth. The Fed took interest rates into restrictive territory in the first quarter of 2023.
All right, listen here, Financial Audit. I've curated the exact resources and tools I personally use or would use if I was in certain situations. So take advantage of these offers in the resources section in the description below. The first one, I've moved my investments to Webull. Do the same and transfer to my investing app of choice, and you get cash bonuses of $200 all the way up to $30,000, depending on initial funding amount, and up to 8.1% APY on your money, and up to 3.5 matches for your IRA. And then number 2, a great new checking account that I've switched over from SoFi, and it's called Chime. Get that $550 bonus when you sign up with direct deposit and get almost 4% on your money just sitting there. And then 3, automate your investing with Acorns. Usually sign-up incentives are only $5, but you get $20 with my link. Number 4, you can increase your income and boost your resume with a course career certification. 5, if T-Mobile is good in your area, switch to Helium and get a literal $0 a month phone plan for the same exact service. But most importantly, go get your free Hammer financial score and see where you stand in the world of finances. Take the assessment at calebhammer.com. You will not regret any of these. Change your life today. Oh, that was a hard time. It was hard to see your entire stock market portfolio to go down, but every time I see red, I see green because I was throwing in money. The best market moves I think I've ever made, by the way, was when the stock market went down this year, like 10% after the tariff announcements. I was like, let's fucking throw it all in, baby. Whoo! Wow, that did well. That did well. Doesn't that go to my point? If you have at least 1% inflation for 50 years with no deflation, you have at least 50% in cumulative inflation. We need to have cycles of inflation and deflation. Cycles of deflation? Buddy, I'm sorry. I mean, listen, no, we don't have the half cent for a reason now, right? And that's okay. Okay. The window of a cycle of deflation would fuck, dude. I don't want to live in that. If anyone wants some kind of software developed, looking for dev type jobs for some programming or jobs in manufacturing, look for some programming jobs in manufacturing. Pays good money and places are in desperate need of them. My dad's been struggling to find help for 3 years now. There you go. There you go. Thanks for that $20. When it comes to training, by the way, for that kind of stuff, have you guys checked out boot.dev? Pretty fun. I'm shit at coding and stuff, but it actually makes it pretty interesting to learn. Just saying.
Since then,
not even a sponsor of this, but
they've held the target for the federal funds rate high relative to the so-called neutral interest rate of around 3%. In other words,
yes, worth mentioning the engineering. The whole business team is not moving to New York City. Content team, though.
The Fed's past decisions are restricting today's economic growth.
Nonetheless, with policy in restrictive territory, the baseline outlook and the shifting balance of risks may warrant adjusting our policy stance.
But historically, it's the case that as the Fed tightens and starts to contain inflationary pressure,
I see the resemblance. Do you not?
Pressures that eventually puts downward pressure on the labor market. It was the case that June actually saw negative payrolls, which is the first time that's happened since December of 2020.
I think the Fed is cutting from a place where it believes
I think that was Caleb Hummer.
It has room to be wrong. Fed policy is best designed to address cyclical issues. If it's cyclical, the Fed over time should be able to nudge us back onto the path, but it can't change the path.
businesses that see lower interest rates could be motivated to hire more workers.
A lot of it boils down to confidence. If I'm going to be facing relatively less restrictive interest rate policy, I can plan for that in the future and say, well, my burden here on the debt side is going to go down a little bit, but
Caleb Hummer back on camera.
my business is still relatively strong. I can take that extra risk and make that investment in an individual or in some kind of technology.
Lower interest rates have many other effects too. For example, saving rates on bank deposits may fall.
I would rather have a lower savings rate though, and fucking, better employment for people. The younger workers are mostly impacted by AI. I already mentioned this, but no, I don't think so. Not right now, maybe in 10 years. This is more the job market shit and tech companies overhired. Going off my last comment, my peers don't want to hire entry-level positions because a lot of that entry-level work can be cheaply replaced by AI. If you can find me some data that suggests that, I will agree. I unfortunately have seen the data, and that's what I need to see, not anecdotal examples.
Financing costs for a mortgage or car loans could move lower as well, but only if Treasury bond yields follow the Fed.
Long-term rates are incorporating a wider array of factors, which include a large budget deficit, which include trade policy uncertainty and tariffs, which include higher inflation. And as a result, they're not moving as low as the Fed funds rate.
Yeah, very decent chance the little sticky inflation we're starting to see now that's making the Fed unhappy is those trade policies, kind of filtering through the economy. It's very difficult.
Is likely to move over the course of the next year.
It's a highly political situation. It's totally rigged. Political. Smart people know it.
The slow pace of hiring is political trouble for the president. Experts say his policies could be...
Yeah, nothing. Well, it doesn't even matter right, left. If someone's on the right and whoever the president is during a tough job market is on the right, they'll fucking turn on them. Job market is all that matters, whether or not people can get jobs and pay their bills. That's it. It supersedes everything in the end. But since we're in a halfway decent place right now, even with unemployment ticking up by 0.1%, because we're in a halfway decent place, people aren't freaking out about that. I think unemployment would have to go to 6%, and then people would be like, whoa!
Contributing.
No matter who's president. Again, people on the left would go against Biden if that was happening too.
Manufacturing or construction or trade and transportation, those industries have been under the most pressure with hiring. Facts of that definitely point to the policy environment having a pretty serious and direct impact on labor. So it's not as much a
But this is why Trump's pushing for those lower rates. He's really pushing for those lower rates.
Monetary policy issue, but you could also argue that some monetary policy easing and accommodation could help at the margin for sure.
Then there's immigration.
Reduced immigration is curbing labor supply and reducing the so-called break-even rate, the rate at which the unemployment rate starts to increase.
You could think that over time,
2026 to 4.5. Listen, it's not thrilling, and obviously we're shooting for 4, but as far as all the doom and gloom we're getting, that's not as bad as you'd think. But I guess it's because immigration. Less people having the jobs. It makes it easier for other people who get laid off to go find one.
Domestic unemployed or native-born unemployed people could take the jobs of immigrants. Some of these jobs that are taken by immigrants are jobs that historically employers have found are not ones that are taken by native-born people.
Yeah, but that forces them to boost up prices, which unfortunately increase pay, which unfortunately then also, in order to keep the same profit margins, will force them to increase prices, which will be a inflationary no. Sad. Agriculture specifically is what I'm thinking, but most might just be replaced by tech. We'll see.
As the labor market deteriorates, prices are still increasing at a faster pace than the Fed's target rate.
Yes.
That makes an interest rate cut somewhat risky. Despite this, President Trump is pressuring the Fed to prop up the economy with lower interest rates.
I really worry about the financial integrity of the Fed, much more than the integrity of the BLS. If we lose the institutional integrity of the Fed, we're going to step back in a major way in terms of good economy.
I agree. If we're going to have the Fed, I know many people are against the Fed. I don't think it's a conversation that's even a conversation we can have. We're not getting rid of the Fed. Okay. So it's that. Yeah, you could qualify the conversation with that. Okay, we're not. So if we're going to have the Fed, which I think we're going to have the Fed, I'd rather them be independent. Again, what we saw with Nixon when he was really interfering with the Fed, I don't want to go through a period of stagflation, man. I really don't. I want an independent Fed.
Economic outcomes.
And let's not forget,
It just can't be politically motivated, and it's always going to be politically motivated in some kind of way. But the less amount we can make it possible. See, Sean said abolish the Fed. Oh, that's great. Okay, that's great. Okay, so it's not going to happen. So then let's have a conversation about what we prefer it to at least do while we have it.
we're coming off of an environment where inflation has been very high.
Like there's no political will to do that, right? That would just be, there's just no political, it's just like, you can be totally against it existing, and that is a fine and valid opinion to have. We need to talk real world, right? We need to talk real world. And that's just impossible in the political landscape.
Post-pandemic, and many people are still struggling to make ends meet.
We also have to look at this in the context of an economy that is more supply shock driven. And when you have a more supply shock driven environment, you are just definitionally, the Federal Reserve or any central bank just has less power in being able to combat inflation and also being able to help the labor market.
If the Fed is wrong here and it's cutting interest rates into an inflationary environment, then the impact could be negative for many people in the sense that you would have higher inflation, and that would really hurt a lot of people.
Taxes need reform. Middle class shouldn't be burdened with the overtax for everyone else. I mean, we definitely have a more progressive tax system for sure, right? The top 50% of earners pay 98% of all income taxes in the country, in the federal income taxes. The top 1% pay, 30% of all net income tax? No, 50%. No, sorry. Well, oh shit, I forgot. Top 1% pays 30%. Top 10% pays 50%, top 50% pays 98%, and the bottom 50% pays 2% of all taxes. Yeah, so I mean, it's a progressive tax system for sure.
The U.S. job market is very dynamic. The trouble right now is that tax policy, immigration policy, tariff policy are all in flux, and so it makes it very difficult for businesses to adjust. Once things settle.
Yeah, and they make 99% of the money. They should pay 99% of the taxes. Do they make 99% of the money? Is that a fact check truth? What percentage of money do well, if it was the top 50% of earners, isn't it the top 50% of money earned? Wait, right? Like the top 50% of earners pay 99% of taxes, but they're the top 50% of earners. So they don't make 99% of the money because they're the top 50% of earners. So that didn't just make sense. That was... of course, if they're the top 99% of earners, of course they should pay the top 99%. No, they're the top 50% of earners that pay the 99%. Like, I think you forgot that. Then one guy in here said, the top 1% doesn't even come close to paying 30%. You're actually right. The top 10% does not pay 30%. I do apologize. The top 1% actually pays 40.4% of all federal taxes. So you're correct. It is not close to 30%. It's 40%. Cunt. I'm sure you have some political motivated, hate of people, blah, 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 blah. Facts are all that matters. And that's a fact. That's the reality. No emotions. Who gives a fuck? Who gives a fuck?
Down. If the government backs out and gets out of the way of the free market, U.S. companies should create the jobs for those who need them.
Ben Shapiro arc. That's not even, it's just data. Like, I don't give a fuck. That dude was on emotions. He's like, top 1% doesn't even come close to paying 30%. Because he likely hears from like political activists that, lower class, they pay a higher effective income tax rate. Well, it's effective. You know why? Because most of the top 1%, it's in taxes, it's in stocks they own, companies that they founded that ballooned up. And of course, you don't have to pay taxes on an unrealized gain of a stock. That is just a rational thing. So when they bring up, they pay less taxes, it's like, no shit, but that's not income. It's not income. When they sell it, they have a taxable event, and then that is taxed. But that's taxed at a capital gains rate. Now, in places like New York City, capital gains is taxed at an income level. But federal government-wise, short term, we're talking like 15%. Long term, we're talking like, 20%. So... like, what are we doing? It's not an emotional thing. It's not an emotional thing. You can still advocate for them raising taxes, but don't have an emotional argument. There is a factual thing to it. And that's the facts. That's the facts. You can still advocate for higher taxes if you want, if that's your political position, if that's your economic position. But don't do it on fucking emotions. Do it on reality. Hey, Caleb Hammer stream fans, make sure you get your financial score for free. Take the assessment at calebhammer.com or dollarwise.com. It's free. See where you stand in the world of finances.